Welcome back to the best prop for you trading floor. Today we're going to cover silver, and the key theme is simple. Gold has already broken to fresh February highs, but silver is lagging. Look at this support at 92.30. This is from the early February, and silver is still below that level, but gold has broken. Actually, currently sitting at support being the 61.8 Fibonacci. So if the metals momentum continues, silver can play catch up. So if you're in a prop challenge, this is exactly where traders get hurt. They see a catch up trade, the oversize, and 1 week takes them all out. So we'll keep this structured. Driver first, then levels, then two clear setups with strict invalidation. So gold's upside has been supported by tariff uncertainty. Trump has been pushing new tariff steps in the days after the Supreme Court ruling last Friday, which keeps the macro backdrop noisy and can support safe haven demand when headlines hit. But we also saw sessions where gold, of course, pulled back on signs of progress in US-Iran talks today, for example, which reduces immediate safe haven demand. But tonight, there is an additional headline risk. President Donald Trump is delivering his 2026 State of the Union address. So expect fast moves if trade, tariffs, or geopolitics get escalated in this speech. So let's jump into the silver chart. The opportunity here is that silver has not cleanly broken to fresh highs the way gold has. So silver is the laggard, and laggards can accelerate once the market commits. So what is the key map for today? Well, key breakout level is the 92.32. This is the line in the sun for the catch-up move. First upside target, we're going to pull out our Fibonacci to see if we can find any clusters that actually indicate a magnet zone. First, our Fibonacci. This is at the 50 Fibonacci, guys. So next one, the 61.8, we call it 100 because 99.6, it's pretty much the same as 100. What else we're going to do is take out our Fibonacci extension, and we're going to look at the previous run to the upside and the pullback low. That brings us to the 94.30 at 94, at the 100 Fibonacci, excuse me. Interestingly, prices currently sit at the 61.8/38 Fibonacci, okay, at 85. So as long as we maintain this level, the bias remains to the upside. Interestingly and importantly, I want you to look at all the Bollinger Band lines. They are all looking up on the 4-hour, which keeps the bias bullish as long as price, of course, respects the middle line on pullbacks. So below that level, we're looking at 82.80. RSI is cooling off, and after a divergence, of course, we have come down to around the 60, but for now, it looks like it might have reset. If not, we could see a reset down to the 50. And then we could be looking for prices to start moving back higher once again. So here are the two best prop for you style setups. One momentum, one patience. The first setup is we're looking for the 4-hour chart to close above the 92.70 and hold. No immediate snapback under the level. The entry idea, of course, would be to do it on the breakout or on the first clean retest of the 92 as support. Setup B. First of all, stops. We keep it logical below the breakout structure. Not wide because we're talking about silver and it's quite volatile. Targets, we were looking for a 93, then 100, and then above that, we go all the way up to 110. Setup B, we have a pullback buy. Okay, so price might fail to break 92 initially, okay, and rotates back into support. The entry idea will be to buy after confirmation. You look for rejection wicks, a reclaim of the level, or a clear bullish close back above the support. The stop in this case would be below the support that you would be using, or even below the lower band if we come down to the midline. And invalidation, of course, would be the break and hold below that low. Target will be, of course, back to the 92 initially, then the same targets as we identified in the first scenario. Now, the prop trader piece. This is how you don't blow a challenge. One idea, one risk unit. Don't take both setups at full size. If setup A triggers and fails, You don't instantly revenge trade setup B. Size down into headline risk. State of the Union can cause a spike that ignores your perfect technical entry, so reduce leverage and accept smaller profits for higher survival. And if price loses the level that makes your trade thesis true, you're out. No widening stops. Silver can absolutely reap when it plays catch up, but the goal at best for you is to stay consistent, protect drawdown, and let the market pay you for patience. Watch 92. Respect 86 and 82.50, and let price confirm the next leg. Trade smart, and I'll see you in the next breakdown.